Hey, good morning. Let's go over today's trade plan. So in the overnight session, we saw that buyers were active, but ES failed one tick above the previous swing high of 95 quarter, and right now the market is balancing within a range. Heading into the open, we have pre-market support at 82 half to 84 half, and this area can almost be viewed as a micro bull bear zone or a short-term bull bear zone. As long as ES is holding above it, we know that there is still potential for the market to attempt a move higher. And if we are breaking and holding below that zone, then ES can easily pull back and retest the 76 half to 79 initial support zone where responsive buyers can still be active. So this 82.50 to 84.50 area is going to be important off the open to establish the short-term directional bias. Above that, we have a high volume node at 86.75. And on the upside, the primary resistance is 95 to 97 half. If we can take out 95 to 97 half, then that would confirm the buyers in control. And from there, we can go up and retest 2103 to 2105 and possibly even higher. But right now, the main hurdle on the day time frame is 95 to 97 half. On the downside, in the event that we actually break the 76.50, buyers can still be active at 68 half to 71 half and pretty much at every support area on the downside. So right now we know that the market on the larger time frame is trading within a balance, but after the strong reversal on Friday, we want to favor the buy side unless we're getting very clear indications that even Friday's reversal is now failing. So if we were seeing excessive weakness in the broader market, if we were seeing excessive weakness on the advanced decline and the momentum was sustaining on the downside, then of course in real time we'll need to be more cautious and take that into account. But absent any heavy selling, we are going to give more preference to the buyers, especially above 82 half to 84 half, which, like I said, can serve as a short-term bull bear zone to establish that short-term directional bias. Aside from that, keep an eye on the Russell. If we start seeing a lot of weakness in that market, it can certainly hold back the S&P. And given the large moves that we've seen over the last couple of days, ES can have a more limited range on the day time frame today. So Thursday and Friday were very wide range sessions, and at this point, since we don't really have any major economic catalyst to really be a driver for a big range, we can have a limited range on the day time frame. It doesn't mean that it has to be a small range, but certainly not expecting anything like Thursday or Friday today. So if we hold pre-market support, the high odds target would be initial resistance, and above that 2103 to 2105. On the downside, if we break down, 76 half to 79 is an area where buyers can step in, and 68 half to 71 half is a area where the downside or the selling can shut off, and the market would be exhausted into that area as well. So that's an area where the market can reverse even if we do head down there. But for now, on these smaller time frames, buyers can technically maintain control, and the breakout structure from Friday can remain intact above 82 half to 84 half, and even 76 half to 79. Buyers can technically still maintain control even above that on the larger time frame. So that's still an area where we can look for a long setup on first test. So those are really the main ideas heading into the open. In real time, again, we're just going to be looking for any signs of excessive weakness. As long as we're not seeing any excessive weakness, we will go ahead and trade on the long side at the key support areas. So those are our main thoughts. Let's see if the buyers can maintain control from Friday, and we'll take it from there.